Welcome to the Northbound Wealth Podcast. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast. Hello, everybody. This is Brent Foster, founder and CEO of Northbound Wealth Management, and this is the Northbound Wealth Podcast. Volatility, uncertainty rule the week for markets. Stocks pop, drop, then rally. A lot going on last week. Stocks notched a solid gain last week, rallying behind upbeat earnings and a dovish Fed and mixed economic data. Markets began the week with an upward bump as positive news from some mega cap tech companies outweighed disappointing updates from other tech names. The tone quickly changed on Tuesday as higher than expected Q1 wage growth triggered inflation and interest rate anxiety, just as the FOMC kicked off its third meeting of the year. Each of the three major averages dropped more than 1.5% on the last trading day of April. That was last week. When the Fed announced it was holding rates steady on Wednesday, stocks initially rallied into the news, but sellers got the upper hand late in the trading session, and then prices ended the day slightly down. On Thursday, stocks trended higher as more companies reported upbeat Q1 earnings. And then on Friday, stocks pushed higher after the April jobs report that indicated that unemployment ticked up and the economy slowed. The 175,000 jobs created in April represented slower growth than the over 300,000 added in March, and less than 240,000 is what the economists expected. Some Fed watchers believe that the news bolstered chances that the Fed may adjust rates sooner rather than later. And then on the blog, I've got this post as well as Y charts, weekly market insights, major index return summary. So the Dow Jones Industrial Average year to date is up 2% through the end of Friday. MSCI EFA index is up 3.51%. That index tracks the overseas international markets. The NASDAQ composite, which is tech-heavy NASDAQ companies, is up 5.75% on the year, and the S&P 500 is up 6.64% on the year. And just to review, the Dow in the last 12 months is up 15.89%. MSCI EFA index is up 11.08%. NASDAQ composite up 32.17%, and the S&P 500 is up 24.85%. Again, that's in the last 12 months. It's called the one-year trailing number. And so the S&P 500 closed last week at 5,127.79. And again, that's up from around, we had a kind of a bottoming process right at the end of April and May. Like the S&P was down around 5,000, between 5,000 and 5,040. So we're up from there. 10-year Treasury note on the 3rd of May was 4.50%. And 1 month ago, it was 4.36. 3 months ago, it was 4.03. And then 1 year ago, it was 3.38%. So it's up significantly since basically a year ago. So 4.5% is where it's printed now, 10-year Treasury note. So we're going to pay attention to that. Once the 10-year note gets to about 5%, you guys, we tend to see a pullback in the equity markets. And so we'll just be watching that and then also focus on the Fed. All right. Markets hate uncertainty. So Fed Chair Jerome Powell attempted to clarify the Fed's stance on the outlook for interest rates at the close of its two-day meeting. Determining what's next for interest rates in the context of stubborn inflation is no simple task, but Powell was as straightforward as possible as the press conference. He said, quote, "I think it's unlikely that the next policy rate move will be a hike," he said. "I'd say it's unlikely," end quote. So I think higher for longer, but also we probably are at peak interest rates, which means the future indicates that the interest rates ought to start trending lower, which is actually a catalyst for the equity markets to kind of price in what that pace of rate decreases or the pace of inflation looks like, and that type of thing. So all very interesting, all data that we're tracking, and so that might be a catalyst for the market to press higher. We might get actually a melt up, which is contrary to what some people believe. This week, key economic data that we're tracking: Wednesday, EIA petroleum report; Thursday, jobless claims; EIA natural gas report; the Fed balance sheet; and then Friday, consumer sentiment, and then Treasury sentiment. So we're going to be tracking that. And the notable companies reporting earnings: Monday, Vertex; Tuesday, Walt Disney, Arista Networks; Wednesday, Uber Technologies, Airbnb, Shopify, and Emerson Electric. All right. Tax tip for the week: if you received a cash payment of over $10,000, you may be required to report it to the IRS. In this case, a cash payment includes U.S. or foreign currency and can also include cashier's checks, bank drafts, traveler's checks, or money orders. In addition, cash payments to individuals can include payments from companies, corporations, partnerships, or associations. For example, these could consist of payments from the following parties. Number one, dealers of jewelry, furniture, boats, aircraft, automobiles, art, rugs, and antiques. 2, pawnbrokers. 3, attorneys. 4, real estate brokers. 5, insurance companies. And 6, travel agencies. This requirement refers to cash payments received as one lump sum in 2 or more payments within 24 hours, as a single transaction within 12 months, or as a part of 2 or more transactions within 12 months. So how can you report cash payments? Well, taxpayers should complete Form 8300, report of cash payments over $10,000 received in a trade or business. That's what the form is called. Very long title for a form. You can file this form electronically or mail a copy to the IRS. You must submit Form 8300 within 15 days after receiving the cash payment. And again, this information is not intended to be a substitute for specific individualized tax advice. We suggest that you discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. Hey everyone, in this segment, I want to share with you some identity protection strategies. Are you doing enough to keep your information safe? Put this out there on the blog, but you can listen in. There isn't a week that goes by when you don't read about some data breach. Safeguarding your personal information starts with understanding cybersecurity risks, knowing what to look for, and doing everything you can to help protect yourself. So it's a growing problem. Last year, identity theft continued to grow, setting 2024 up as another year of ever-increasing cybersecurity issues. Here are a few statistics. In 2023, the FTC, or the Federal Trade Commission, received a total of 5.7 million fraud and identity theft reports. Georgia, Maryland, Delaware, Nevada, and Florida were 5 states reporting the most identity theft cases per capita. South Dakota had the lowest. The median loss for victims of fraud cases is about $500. Total losses are estimated to be about $10.2 billion. Every 22 seconds, identity fraud claims a new victim. Nearly 33% of Americans have faced some kind of identity theft attempt. I got a chart out there on my blog. You should check it out at www.northboundwealth.com. In it has the number of fraud, identity theft, and other reports by year. And just by looking at the chart, it is off the charts, really. Compared to 2001, you're looking at around 330,000 cases. You fast forward to 2011, you're looking at 1.9 million cases. So a huge jump from 330,000. Then you jump forward all the way up to 2020, you jump to 5.74 million. And you really see it take off in 2019 from 3.43 million, jumping to 5.74 million. So obviously the pull forward of everyone getting online during COVID, I think, was a big attribute to that statistic and the uptick in cybersecurity. So low tech, no tech, and high tech identity theft vulnerabilities. While businesses, law enforcement, and legislators contend with identity theft, some of the most effective methods to help manage your personal information are in your own hands. There are no tech, low tech, and high tech ways to help address your vulnerabilities. So, no tech would be mail, like as an example, mail, paper statements, wallet, or a purse. So, physical stuff. Low tech examples are email, text, social media, some credit cards. High tech would be smartphone, app data, online accounts, and Wi Fi network stuff. So, no tech. You might be surprised to learn that the FTC reports that over half of all identity theft comes from physical documents. You can help manage this risk by taking a few simple actions, such as the following: registering for the United States Postal Service informed delivery so you know what mail to expect each day. Buy a shredder and use it for any statements or other documents, including anything that may include account numbers or any other personal information. Go paperless with as many companies as possible. Avoid keeping sensitive information in your wallet or purse. And also, I'd like to add, if you're a guy, like making sure that your, or a girl, wallet or purse doesn't, if you have those chips that scanners can pick up, make sure it's in a covering that can block the transmission of your information to something else that you didn't intend it to go to. So, low tech, many phishing attacks come from scanners disguised as trustworthy sources. Here are some of the most common types of phishing. Email phishing is the most common, and tactics like phony hyperlinks lure email recipients to share their personal information. And just so that you guys are aware, they've gotten a lot better at it and mirroring legitimate emails. So it's if you're not paying attention, you could easily click on something that you don't intend to. Malware phishing involves planting malware disguised as a trustworthy attachment in an email. In some cases, opening a malware attachment can harm your system. Vishing has attackers, that's with a V, by the way, has attackers in fraudulent call centers attempting to trick people into providing sensitive information over the phone. And that's something that's happened to some people I know out there. So I want to make everybody else aware of it. And oftentimes you hear of attempts, somebody claiming to be from, say, the United States Treasury, or from, say, a bank, or a government official, the IRS. And in this day and age with artificial intelligence, they can record your voice. And if they have other data of yours, they could use that to actually access accounts you have no idea are there. So anyway, here are a few ways to identify some types of phishing attempts. Don't trust email display names. Click to see the sender's full email address. Scammers often create logical display names over their actual addresses. Check emails for typos and poor grammar. Hover over hyperlinks before clicking. Read the salutation. Don't open the email if it looks off. Be wary if the email is addressed to quote unquote valued customer instead of your name. It's likely fraudulent. Review the signature to ensure the contact information is in the email footer. Beware of threats like, quote, your account has been suspended, end quote, via email or phone. Be very wary if any sense of urgency is implied or information is requested. Be skeptical of any text messages you receive from unknown senders, even ones from sometimes legitimate senders. It's interesting that they can use that to hijack your data and your information. High tech. So some smartphone apps collect details about you, including age, GPS data, and browsing habits. Make certain you understand if an app accesses your camera, tracks your location, records your audio, or reads your call logs and text messages. Check out the app privacy report occasionally, see which app is or has access to your data. You should be able to turn off data tracking with an app at any time. Avoid using public phone chargers at airports or restaurants. They can contain malware that gives hackers access to your devices. Use a portable charger instead. Wi-Fi can be risky, especially in public settings. While at home, you should consider password protecting your network and keeping router and security software up to date. You might also want to consider using a virtual private network or a VPN when in public. If you are not on a public network, look for sites marked HTTPS. If possible, avoid making financial transactions when using an unfamiliar internet connection. That's what I do when I'm out. If it's not familiar with me to get on a Wi-Fi network and do a transaction, I won't do it. Somebody's could be very easily monitoring all that information and stealing that data when I put it in, especially like a credit card number or something like that. Peer-to-peer payment apps, P2P is what they call it, like Venmo have become popular for everything from paying babysitters to splitting the check at a restaurant, but they also have hidden risks. Top P2P scams include impersonation scams. So criminals persuade victims to send money by pretending to be someone they're not. And thanks to artificial intelligence, by which scammers can now clone voices and faces, these scams are becoming even more challenging to detect. Fake seller scams. So criminals advertise a phony product or service online, collect your money up front, and then disappear without delivering the goods. Advanced fee scams. Advanced fee scams. So this is a scam where someone claims you've won a prize and offers to send you winnings in exchange for you sending them a service fee. Venmo is owned by PayPal. Remember, any companies mentioned are for illustrative purposes only. I don't want to knock on them. It should not be considered a solicitation for the purchase or sale of any securities, but it's good to know that Venmo is owned by PayPal. To protect yourself from P2P scams, only use these payment apps with people you know and trust, such as friends, family, or local businesses. Consider using a credit card if you're transacting with someone new or unseen. Credit card providers may offer some level of fraud protection as part of their value proposition. The best defense is a good offense. So you can take proactive steps to defend against identity theft and fraud, such as strong passwords, multi-factor authentication, or MFA, and credit monitoring. Create, manage, and store strong passwords. So consider using a password manager. Password managers store and organize your passwords with a secure digital encryption and multi-factor auth. Certain password managers are designed to connect your login information across multiple devices, websites, and apps. Some browsers have built-in password managers that can help. There are many password managers you can subscribe to with a variety of features and benefits. Here are some of the most popular according to a 2024 report from cybernews.com. Number 1, NordPass. Number 2, 1Password. The number 1Password. Okay. Number 3, RoboForm. Number 4, Keeper. And number 5, Bitdefender. If you are not using a password manager, you should focus on password strength. As a general guideline, strong passwords include 12 characters long, but you could go with 14. 14 is better. It's just a couple more. It is a combination of uppercase letters, lowercase letters, numbers, and symbols. These are not words found in a dictionary or personal names, characters, products, or organizations. They are significantly different from your previous passwords. It should be easy for you to remember, but difficult for others to guess. Once you've created a strong password, keep it secure. Never send a password by email, instant message, or any other means of communication that is not reliably secure. Consider using a unique password for each website. You can write your passwords down, but keep them in a safe location. Change your password immediately if you suspect an account is compromised, and get in the habit of changing passwords periodically. Use online providers that employ multi-factor auth. I shorten that and say auth because I don't like saying the whole thing of authentication. That's a big word to say. So going forward, you'll hear me say multi-factor auth. If you don't know the term multi-factor authentication, you may have seen it in action. If you've ever tried to log into an account and received a text with a code that you need to enter, or you are asked a series of questions like, who is your high school best friend? Or what was your first car? You have used multi-factor auth. MFA, or multi-factor auth, is an identity verification method in which users must supply at least two pieces of evidence to prove their identities. It may be annoying, but it's worth it. MFA blocks 99.9% of modern automated cyber attacks. So another thing too is monitor and or freeze your credit. You can do that. You can monitor your credit using three main credit service providers. You can also take additional step of placing a freeze on your credit. Freezing your credit may help prevent fraud because it prevents new lines of credit from being opened without your permission. The cost is free, but keep in mind that the freeze remains in place until you remove it, which can be an inconvenience. Not going to lie about that. Contact the national credit bureaus to request fraud alerts, security freezes, and opt-outs from pre-screened credit offers. Each firm has its own guidelines, so ensure you understand the rules before placing restrictions on your account. The three credit bureaus are Equifax, Experian, and TransUnion. And I have the phone numbers posted out there on the blog if you need to reference those. While security systems have been put in place by most companies to monitor and fight large-scale cyber threats, it's important that you stay vigilant regarding your own cybersecurity. Passwords and identity, your day-to-day routines are the first lines of defense. And I have the cited sources there. There's a lot of good ones. Identitytheft.org. I went out to Microsoft, AARP.org. cybernews.com and zippa.com for those references. Also, if you have any questions on this type of thing, you can always give us a call. Happy to talk about it. 317-399-1107, Northbound Wealth Management. All right. So we just talked about cybersecurity, and I just wanted to share with you guys the top cybersecurity stocks or companies in market cap across the industry. So first, we'll start off by saying the company, the ticker symbol, the market cap, and then to describe a little bit of it so you guys can learn and be familiarized with them. And quite a few of these Northbound Wealth Management clients own in portfolios. So here's the first one, CrowdStrike Holdings, ticker symbol CRWD. It trades in the NASDAQ. The market capitalization of CrowdStrike Holdings is $71.1 billion. One of the largest pure play cybersecurity companies in the market cap and revenue, and a leader in endpoint security software. The next one down is Zscaler. It trades also in the NASDAQ, ticker symbol ZS. It's $25.9 billion. Cloud computing and internet security software provider. You might have heard of them. Okta, OKTA, ticker symbol, trades also in the NASDAQ. It's a $15.7 billion company, cloud-based identity and access management company. And I believe they work with a lot of enterprises. Sentinel One, which trades on the New York Stock Exchange under ticker symbol S. It's a $6.4 billion market cap. Its recent IPO and CrowdStrike competitor, so it's in the same space. Palo Alto Networks, really like this company. It's a good one. It also trades in the New York Stock Exchange, ticker symbol PANW. It's got a $90.8 billion market cap, largest independent cybersecurity company by total annual sales. And I think they're based out of Palo Alto, California, obviously. Fortinet, they trade on the NASDAQ under the ticker symbol FTNT. They're a $48.9 billion market cap company, large security company with best-in-class hardware for data center security. Datadog trades on the NASDAQ. DOG is the ticker creatively, right? DDOG. It's a $41.5 billion market cap company, and its cloud native platform built to collect, monitor, and yield insights on cloud-based data and operations. And then finally, last but not least, and this isn't all of them, this is just the largest ones, AKAMAI. So AKAMI trades on the NASDAQ under AKAM. $15.3 billion market cap, one of the largest internet infrastructure companies that helps secure web content. So that the industry has really grown into an industry over the real industry with hundreds of billions of annual sales per year. And it's all because of everybody getting online more and more and more, and the need for it, and all these attacks against the institutions of America. And so a lot of Fortune 500, like pretty much everyone throughout the entire market capitalization of all the markets, all the way down to small financial firms like mine and small CPA firms or law firms, everybody has to have cyber on their radar. It's built into everybody's budgets now. And so is insurance, and insurance premiums continue to go up due to the costs of ransomware and all kinds of things that happen and that we have to protect against. And you do too at home. You need to take some steps as well, given that our culture has changed and technology is here to stay for the long run. So anyway, I wanted to share that information with you. I hope you found it insightful. A lot of these companies we own here in client portfolios at Northbound Wealth Management. Thank you for listening to the Northbound Wealth Podcast. Have a great week and weekend. If you have any questions, please reach out to Northbound Wealth Management, 317-399-1107, 317-399-1107. And this is Brent Foster signing off.